It is difficult to look at a chart that plummets from nearly $1 down to a few pennies without assuming the project is over. For most of the crypto market, a 90% crash marks the end of the road. Yet, a growing number of traders are looking at this exact chart as the potential setup for a massive recovery. This is Nillion, a project known in the industry by a cryptic nickname, the blind computer. Its survival depends on whether its architecture can solve the single biggest vulnerability in the artificial intelligence sector, the exposure of raw data. Nillion operates as a Web3 AI infrastructure project within the DePIN category, using a distributed network of hardware to handle complex computation. Current AI systems have a major flaw. They require total access to raw, unencrypted information to function. This creates an immense security risk when processing sensitive pipelines like healthcare records, financial data, or identity verification. Nillion intercepts observability using privacy-enhancing technologies, or PETs. These allow the network to wrap the AI computation in a cryptographic shell, hiding the data from the hardware processing it. This blind computer mechanism allows the network to calculate and process information without ever seeing the original user data, returning a processed result while the inputs remain hidden. Eliminating the requirement to expose raw data allows businesses to leverage powerful AI models while maintaining a mathematical guarantee of user privacy. While the technical foundation is compelling, the reality of the NIL token reveals a much more difficult environment for investors. There are currently 300 million NIL tokens in circulation, but the project has a hard ceiling of $1 billion. This creates a micro-cap valuation between $15 and $30 million, leaving the token highly susceptible to extreme price volatility. The massive gap between the current and total supply means upcoming token unlock events pose a significant threat, as new tokens entering the market create heavy selling pressure. Compounding this issue is the lack of a major token burn mechanism to drive scarcity or offset the incoming dilution. The disparity between innovative privacy tech and a high inflation supply schedule makes for an inherently hostile environment for early buyers. Despite the supply risks, a resilient crypto-native community has rallied behind the idea that privacy is the next major narrative for AI tokens. That narrative gained momentum through exposure on the Binance launch pool and rapid listings across major exchanges like Bybit and KuCoin, providing the project with high-tier market access. This growth has led to inevitable comparisons with the current heavyweight of decentralized AI infrastructure, BitTensor. The two projects serve different functions. BitTensor builds a decentralized network for AI models to collaborate, while Nillion focuses strictly on encrypted, private computation. Nillion targets a separate, largely untapped monopoly on encrypted data processing, operating parallel to infrastructure giants like BitTensor. Current price action reflects fallout from the initial hype. Falling from a 95-cent peak, the token is leveling off between 5 and 7 cents. Traders watch 10 and 15-cent marks as critical resistance zones needing to break for reversal. Nillion pairs a specialized technical proposition with high exposure to the broader AI narrative, making it one of the more distinct plays in the sector. These advantages are balanced against extreme price volatility, the persistent risk of token unlocks, and a lack of verified long-term adoption. Nillion represents a little bet that a resurgence in the AI narrative can outpace the incoming pressure of a billion token supply ceiling. The central question remains whether this technology becomes a pillar of Web3 infrastructure or fades as a temporary narrative pump. If you enjoyed this breakdown, like the video and subscribe for more crypto market research. Remember, this is not financial advice. Always do your own research. Ultimately, the distance between a breakthrough in technological architecture and a sustainable trajectory for a token remains one of the largest gaps in the market.